This is the Politics of Everything, and I'm your host, Amber Daines. Welcome to the podcast where we want to discuss the politics of everything, from money to motherhood, nutrition to narcissism, startups to secularism, the environment to equality, and much more. Our guests are experts in their field or topic of choice, even if you've not yet heard their name. This is a bipartisan podcast, so while we love exploring varied views and get a buzz from a healthy debate, by no means is this a one-sided forum for any one political view. So please listen up and enjoy the politics of everything. Welcome to episode 14 of the Politics of Everything. Today I have Peter Mastroianni discussing the politics of rentvesting, which, if you're not familiar with it, is a very modern term encapsulating where you rent, where you want to live, and invest where you can afford. In Australia, where capital city medium house prices have continued to rise by up to 20% a year for the past few years, rentvesting can certainly be a great way to get into the market and potentially leave you better off in the long term. However, we need to understand the pitfalls and the pluses because we are a nation obsessed by home ownership. Peter has his own business called Rentvesting, which includes a podcast and webinars and offers advice for clients keen to get into the property sector in a less traditional way. Let's find out a little bit more. Welcome, Peter.
Hi, Amber. Thanks for having me on.
Great to discuss this. Obviously, Australia is a place we are kind of obsessed with home ownership and the idea that one day we're all going to have our own house, we own it, no mortgage in our adult lifetime. But for many people in perhaps my generation and upcoming generations like my kids, it's pretty much becoming a thing of the past. Can you explain briefly why this is the case?
More recently, there's probably two main contributing factors. One is interest rates have been very cheap. They're at historically low levels. And in a number of property markets nationally, there's really a supply problem as well. And those two factors, I personally believe, have been a pretty potent draw card for investors. I guess a number of individuals just saw it as too good of an opportunity over the past few years to actually invest, particularly in a market like Sydney or Melbourne that, as you said, has experienced 20% year-on-year growth. It's been pretty incredible. So I think it's probably more of an economics 101 in terms of demand versus has really outstripped supply. And while Sydney has been a bit of a market darling, Perth and Adelaide, Darwin have actually declined over that same period of time. Brisbane's on everyone's radar. Brisbane's, expected to pop, but, we're waiting with bated breath on that. And Melbourne's still charging ahead. So, look, I personally believe the idea of owning a home outright in your lifetime isn't actually a thing of the past. What I believe is that the market parameters have certainly changed, and the traditional home ownership model is certainly changing as well, which is probably why more people are gravitating towards an investment strategy like rentvesting in order to have comfort and security in their life as well.
Absolutely. So I guess, the term rentvesting, I only heard of it a few years ago when I actually became a rentvestor. How did it originate? And really, in a nutshell, how does it work?
I think a few people will probably try and put their hands up to grab the actual terminology in terms of its originations, but I know the Daily Telegraph probably may have been one of the first to actually coin the term, and other property investment specialists that are active in the marketplace have been talking about it as an investment strategy for a little while, and I own the domain and the trademark behind the term.
Lucky you. That's got to be worth something.
Oh, maybe one day, we'll see. But look, the actual investment strategy has been in existence for quite a long time. I think it's just the word has become a bit of a buzzword, and it's something that's been trending for probably around about 18 months or so. And I think maybe why it started to trend is that, in the past there's been this stigma that renting is only for the poor. And, we're brought up to believe that rent money is actually dead money, yet we're never actually educated on how expensive owning your own home actually is. No one ever calculates the interest that they actually pay on their loans. No one even considers the fact that your home as an asset, it doesn't actually produce any income. So you're completely reliant on the maintenance and the upkeep and the mortgage out of your own pocket in the hope that someday it's actually going to appreciate in value. So very simply, rent vesting as an investment strategy allows you to do the heavy lifting, or the investment strategy does that lifting for you. And it's really just live where you would actually prefer to live for your own lifestyle benefits, and invest where you can afford.
Absolutely. No, that does actually make sense. I guess it's just a psychological barrier for a lot of people who, like you say, have grown up with perhaps a more traditional model, or that idea of, I'd love to be able to, put my own stamp in my place and decorate it how I want and all that sort of thing. And in some ways, I suppose, are there any statistics around how many rent vesters there are in Australia at this time?
Amber, not that I've been able to dig up. I'm certainly keen to know that information for myself. I do know in some more recent publications and studies that have come out towards the back end of last year, there was one, the Domain Insights series, which actually suggested that the average age of an Australian property investor is now 34 years old, and that the average age that a Gen Y becomes a property investor is actually 25, which is in stark contrast to the baby boomers who didn't become property investors until they were 45 years of age. So I think just in that age difference there, you can see the dynamic of the shift that's actually taking place in the marketplace, because the baby boomers would have pursued the traditional route, bought their principal place of residence and built up enough equity to then go on and purchase their investment property or build up their portfolio, where a younger generation is now just deciding to invest first before going down that route. And there's been some facts and figures that are coming out of some lenders. The NAB, they publish a quarterly residential property survey, and one of the more recent ones found that first home investors actually made up over 12% of all new property sales in the previous quarter of 2016, or the last quarter of 2016. And that was up from 11.1%, I believe, on the previous quarter. And it also found that...
Okay, so that there are some shifts, aren't there? I mean, it's certainly not, like you say, I mean, I remember when we were looking to purchase originally, you felt like it was, a lot of older people who, yes, for them it's just an investment. It's not somewhere they want to make their home. But the trend seems to be that it is a way for younger people to get that first step.
Yeah. So whilst we don't actually know at this point in time how many rent investors are out in the marketplace, the data is certainly indicating that a younger generation is purchasing investment property at a much earlier stage within their life, and they're actually accumulating more of it, on the basis that these stats are showing us that Gen Y, 22% of Gen Ys actually own at least one investment property, despite the concerns around housing affordability. And that's, in comparison to 20% of Gen Xs, I believe, and 19% of the baby boomers. So despite all the hoo-ha about housing affordability, people are actually actively out in the market and are doing so at quite a young age.
That's very interesting. I certainly wasn't thinking about that at 25. I have to say, it was all about fun. I've rent vested myself. I am Gen X. Look, it makes great financial sense, but I have to admit, I live in Sydney. I have two children, who one's at school and one's at preschool. We moved 3 times in 18 months and we pretty much had enough. So we've actually moved into one of our former investment properties 6 months ago. And look, I've rented for most of my adult life, I have to say, having lived overseas and so forth, where that's more common. Look, it sounds like a great model for people who are maybe young and don't mind that. But certainly, how do you weigh up whether it's worth it for you in terms of, not everyone's going to find a long-term rental in Sydney?
Very true. It's about choice. Rent vesting may not be suitable for everyone. I have a young family myself, and whilst I'm renting it at the moment, I hate the idea of having to pack up and having to move again, but it's kind of the nature of the beast. And I actually want to continue to rent vest for the flexibility that it actually provides to myself personally. But that's a personal choice that my wife and I have actually decided to make. I guess there's nothing stopping you from trying to negotiate longer leases if that is actually possible. But I think it's important to put it into consideration of the overall picture of what you're actually trying to have in your life at this point in time, which may mean that rent vesting isn't actually suitable for you.
Sure. And I suppose the other challenge is, I mean, what we personally found, and I think a lot of other families that have done rent vesting for a while and perhaps do continue to in some capacity is, you know, the idea that people say they buy the investment property, they rent it to you. Oh, yes, it's long term. And of course, their intention is to move in themselves after a certain period of time. So I think the system in some ways is set up so that, you know, as a renter, you always do feel a little bit more vulnerable in that sense.
That's true, and there's momentum gathering from particular lobbyist groups to see some changes actually implemented to give the renter a lot more rights up front during that process. But, you know, the government's looking to relax regulation as opposed to bringing more in, so that could be something that could take some time to unwind.
Absolutely. I do think it's a cultural shift too. Like you say, renting always traditionally felt like, oh, that's something you only do for a while. But I mean, as I said, I've rented most of my adult life and it's actually been great. Flexibility is good, but I guess it depends on your strategy for investment as well. Talking about comfortable lifestyles, and given that looks different for all of us, how do you actually work with clients on their own property strategy?
So personally, my background is finance. So I work with my clients from a money coaching and a lending perspective. I have a team of property mentors that work within rent vesting that spend the majority of their time with their mentees, I guess, trying to understand what their values and their motivations are to map out their property plan and reverse engineer it in terms of working with end result in mind. So a lot of people will come to us and say that they're looking to buy 10 properties in 10 years, which is wow. Awesome. You know, good for you.
Yeah.
But that's hard. But that's an idealistic goal that they have in mind, and they don't know why they want to buy 10 properties in 10 years, or if it's even achievable, and you know that they may be able to get the actual outcomes that they want by just buying 3. So it's a process of really dissecting and formulating a plan that's going to be fit for their purpose, because the last thing that you want to do is start pursuing an investment strategy where you end up just trapping yourself in an investment corner and trapping yourself in a job or a lifestyle that you may not like because you've leveraged yourself too high to try and accumulate so many properties. So
well, that's right. And I think what you sort of touched on with the low interest rates we have, they are likely to move. They have moved in some cases. So I think that long-termism is probably something a lot of people don't consider perhaps initially.
Absolutely. Money's been cheap for quite a while now. So I think it's important from a budgeting perspective where as Australians, we're very lifestyle focused and can at times be quite frivolous with our money. Having some structure or some regimented processes to manage that cash flow can put in some buffers into your own household accounting budget to make sure that, you know, you don't fall into those traps.
No, I think that's sage advice. So, look, you know, a lot of people, when they're looking to invest, they might buy apartments, for example, off the plan or, you know, in great locations, but they often have high strata fees. I know when we've done our investment property strategy, we ended up buying, you know, freestanding house in a regional area and some townhouse investments just because of the strata factor. You know, the fees were going to make it not worth it because the rent's obviously not as high as Sydney or Melbourne or your capital cities. Generally speaking, like, do you have a preference? I mean, it's very hard, I guess, to kind of give off-the-cuff advice, and we need to do the disclaimer that every situation's different, and we can't sort of hold you accountable if it doesn't work for individuals.
Disclaimer, Amber. Disclaimer. Yeah.
Yeah, very important. We've had another podcast about superannuation. The same thing. This is not advice that you can take as a kind of, you know, blanket advice. But, you know, generally speaking, what's your preference in terms of that strategy?
Legitimately, it's a good question. And the best answer, albeit very vague, is that it really depends. If I was speaking with my banking hat on at the moment, banks are placing postcode restrictions on particular areas, one being inner city apartments. Small apartments under 40 square meters, for a lack of better description, do have a bit of a stink to them.
I think you can't necessarily get finance, can you, around some of them?
No,
I don't know if that's true.
It's very tight at the moment, and very few lenders are wanting to lend on that style of security. And there is a lot of stock in the market that is already available or is coming online from a completion perspective. So it'll be interesting to see what happens there. And along with regional areas, there's some restrictions on that. But, you know, regional areas are going to be really defined by the jobs that are available. and also the infrastructure or public transport within those areas. So if I was looking to invest and looking on behalf of my clients, they're probably the fundamental factors that I would look at, being, is it in a high job growth node area? Is there good employment opportunities or a good employment opportunities forecast based on infrastructure developments or new hospitals or schools or necessary public infrastructure investment that could give that capital growth a boost? What's the transport like? If I'm living an hour and a half outside of Sydney or Melbourne or whatever, is it feasible to actually commute on a daily basis? And if I can't drive, can I get a bus or
yes,
can I get a train? And if those fundamentals stack up, it's quite likely that could be a good investment area. I think with apartments at the moment, particularly in the inner city markets of Brisbane and also Melbourne, there's a lot of talk out there that this apartment volume is going to be the death of the property industry. It may not be the case, but there is certainly an oversupply, which will probably be absorbed in the coming years. But it's probably not an area that I would be looking at getting into at the moment.
Yes. It's almost almost competing information we get. There's a housing affordability issue because of the supply. But then we're building all these apartments, which potentially, I know in Melbourne, I have a lot of connections in Melbourne. There's a lot of them sitting there empty, apparently.
Yeah.
But, they're not getting the people that they thought, or they have bought them, and it's just, it's just not the desire, perhaps, for tenants to live in there.
But it's interesting because there's a number of trends that are actually emerging within the property market. One of which is rentvestors, another is property accumulators in terms of, individuals growing large property portfolios. Another is the fastest growing demographic within our society is actual social singles. So more people are moving out of home at an earlier stage within their life, and they're living on their own. They're not necessarily living with a partner or with friends. So the stock that has been developed will get taken up. It's just at the moment they've overshot the market. That's all.
We just all need to catch up in our lifestyles, perhaps. So I guess I remember when the property advisor that we had worked with 5 years ago had said the number one tip she had was don't just want to buy the glamour investment property. And I think that's great advice, which we followed. We had a lot of perhaps our conservative parents saying, buy a 1-bedroom in Potts Point, you can't go wrong, versus, a 4-bedroom house in Newcastle. But we obviously were looking at the tax benefits, the growth corridors, the other aspects as well. I mean, do you have a similar philosophy around investing? Yeah,
I do. I call them boxes. Buy a box. In the fact that it's non-vanilla, it doesn't come with bells and whistles. There isn't lifts in the building, or there isn't pools or tennis courts or facilities such as that, because they all cost money to maintain.
Yes, and at some point you're going to have to obviously help with that if you're going to hold on to the property for a period of time.
Absolutely. And if you're paying out money for, maintenance costs, you may also have a period of vacancy in that property. You may have something else going on within your life. The hot water system could clap out as well. And, I think the best investments are, boxes that are going to be good renters. So buy an investment property with the ideal tenant in mind. So if you're buying in a location, think of the individuals that property is going to attract and cater for that market.
That's very good advice. Obviously, having done this myself, it's sort of, people tell you, and then until you have the experience, you go, oh, that's why people have that. I guess with we're talking very much about Australia, but rent vesting overseas, is this something which has existed for a while, and is it popular? Do you have any idea around that?
Oh, no, only from my own experiences and living, I guess, in the UK. I know in Europe, people have rented for a long period of time. Their rental laws are much different to what they are in Australia as well. People take long-term leases on these properties, and they upgrade kitchens, and they polish the floors, and they paint their apartments and treat it as if it was their own. And the same within New York as well. The majority of the New York population does actually rent.
Well, that's right. And I think a lot of the places are furnished, so it's obviously designed, with longevity in mind in that sense.
Yeah, absolutely. But I have to say, I I've got my blinkers on, Amber, in terms of my expertise and knowledge is mainly in the domestic market.
No, that's okay. I just thought I'd put it out there because I must admit, it seems to be the home ownership thing is obviously something we grew up with, but I know a lot of friends overseas that, like you say, have rented for long periods and throughout their adult life, and it hasn't sort of been an issue for them. I guess if we want to change tack a little bit, a lot of people sort of, when they're older might get the benefits in, say, retirement of having investment properties that income producing, if you like. Do you sort of think about it in terms of it's part of a greater retirement wealth strategy where you might have a bit of super, a bit of this, a bit of that? I mean, I guess you can't put all your eggs in one basket.
Absolutely. So rentvesting is renting and investing, and it doesn't need to be a mutually exclusive decision. And what I mean by that is that you don't have to buy property. You go about growing the largest asset base that you can with the money that you can actually afford. So if that means starting out and kicking in $1,000 to set up a managed fund that you continue to make a monthly contribution to, well, that's your start of which you grow to leverage from, whether that's to buy more shares or use that as seed capital to, kickstart your new entrepreneurial activity, or whether you use it for a down payment for an investment property or your own principal place of residence. I'm a firm believer in being a balanced investor. I've done well out of property myself and will continue to invest in property, but I also invest in my business and I also invest in the share market, and I like to spread my eggs around because, investing does involve risk.
Exactly. And you've worked in finance, so you know a little bit more than perhaps some of us about, the pluses and the minuses of different asset classes, really.
Yeah, I think it's important to hedge your returns, and albeit that property is historically a very safe investment vehicle, there are other asset classes that perform just as well. So I can't remember the exact numbers, but if you had invested, I read this in an article just yesterday, that if you had invested in Sydney property in 2005 or 2007 and you invested the same amount of money in CBA shares, you would have achieved a 200% return on either investment in that time.
Wow.
So, there's stocks out there that are performing equally as well as what the property market is. And I think that the best thing to do is just take a long-term approach. Don't think that getting into a house or CBA shares or whatever it may be is going to produce immediate results, because the longer you're in a market, the better off you're going to be.
Yeah, exactly. Riding those waves. Without getting sort of, obviously too personal, you run us through your own property success story. You've mentioned you do rentvest. I mean, did you start with the little one bedroom somewhere many years ago, or how did you really kind of get motivated to become a rentvestor?
So I started off when I was in my early 20s, and I was working at the time full time and saved a little bit of a deposit. And it was shortly after the first home owners grant had actually been introduced, after the Howard government had introduced the GST. And I bought a 4-bedroom house in Brisbane that was about 8 kilometres away from the Brisbane CBD. And at the time, I bought that place for $143,500. So,
wow, you can't even get a car parking space in the inner city for that.
I know. So I guess I'm very fortunate to have been able to spend that time in the marketplace to be in a good position as it is at the time. And I don't put that initial investment down to experience or know-how. It was just suggested that would probably be a good thing to do. And I actually did a renovation project on that place and sold it. I made really good money on that. The next place that I bought had tenants in it at the time, and it continues to have tenants in it to this day. And I used the equity in that property to buy other properties, and I've gone on to do small lot subdivisions, and now I focus on running the business and doing small developments on the side.
Well, that sounds very interesting. It's interesting that you mentioned you sold that first property because, I know some people's strategies you never sell. You basically hold on and you just keep using the equity.
Yeah. In hindsight, I would have been much better off in keeping that house because my debt on that house was quite low because I bought it for such a low price at the time. But by the time 18 months had passed and I had done the renovation and moved out and sold it, the rest of the market had also increased as well. So it wasn't because I did this amazing renovation. It was because the market was going through a strong capital growth period. So even though I walked away with a handsome sum of money, I put that deposit in a market that was accelerating, and I would have probably been just better off keeping that original investment. But, that's hindsight. And
I used to say hindsight's a wonderful thing, isn't it?
Yeah, it sure is.
But you sound like you've obviously done quite well in any case. We're going to change tack a little bit as we wind up the interview. So I guess my theory is that, and from my own experience in business and in life, you never do this stuff on your own. There's always inspirational figures, whether they be family or business mentors, who you get ideas and inspiration from. Whether you can name them or not, it's up to you. But is there anyone that sort of comes to mind that's really their philosophy and their outlook has kind of shaped your own?
Yeah, there is one individual, and I refer to him as Uncle Colin. He's not my uncle, but Colin was someone that I was introduced to in my mid-20s, and he had a huge influence on my life just from a mentoring and a coaching perspective. I had the opportunity to spend a couple of hours on a Friday afternoon with Colin for a period of time there, and it was the part of the week that I most look forward to. And he was a guy that at the time, he was my dad's age and a completely different person, and gave a completely different perspective on where I was as an individual and where I wanted to actually be. And, just to really go out and pursue what you love to do in order to create the life that you would actually love to have. So he was a very good mentor to me and someone that I've learned some good things off. And to this day, I still actively seek out people that inspire me and stretch me both personally and professionally.
Excellent advice. So just as we wrap up, if you want to give the listeners maybe 2 or 3 top tips about the politics of rentvesting, what would they be?
Well, 1, rentvest. So question
the traditional,
right? Just do it. Yeah. Question the traditional home ownership model. I know it's been indoctrinated, and I know that you've been brought up to believe that this is the best route, but what worked for one generation doesn't necessarily work for the next. So start investigating alternative strategies. And like I said, it doesn't need to be mutually exclusive to property. Invest in yourself, invest in a business, invest in an idea or invest in shares, and go about creating a life that's out of Colin's book that you would want to live. The second tip, automate everything.
That's interesting. I wasn't expecting that to be it.
For your financial decisions that you have to make. And yes, it goes back to a previous point that we discussed around your household accounting. People aren't good budgeters. It's plain and simple. People don't like budgeting. But if you can set up a process where you automate the money that comes into the house and separate it into 4 or 5 different pots, so you know that you've got your expenses taken care for because you've allocated that portion. You've got a portion for your walking around money, and you've got a savings pot for a short-term goal, and which might be a holiday or something, and you've got a savings pot for a longer-term goal, which might be for investing or for a house deposit. And then it kind of removes the decisions that you have to make within your life, because you know that the money side of things is taken care for, and you can just go about your life. I think that has been one lesson that has been very good for me. And lastly, it's probably just broaden the perspective of what investing could actually mean for you. So, property is a great thing to get into, but like I said, you could have an entrepreneurial spirit and want to start a business. And, if you do really well, I'm sure that can allow you to buy those 10 properties in 10 years. So
it sounds like awesome planning. Yeah, dream big, I say. Why not?
Absolutely. Yeah.
Well, that's been wonderful to pick your brain this afternoon. Look, if you are interested to contact Peter, we will have some contact details on our show notes. You've been listening to the Politics of Everything. I'm Amber Daines. Until next time, be well. Thanks for listening today. If you've enjoyed the Politics of Everything, we thrive on feedback. So please add a short review and share the podcast with your network and your friends and family. I'm also always on the hunt for fabulous new guests. So if you've got a view to share and an idea how to get our listeners excited, please email me at amber@bespokecoms, that's BESPOKECOMMS.com.au, and we'll be sure to get back to you. Until next time.